Welcome to Discovery Watch with Jon Kaiser.
I'm Jim Goddard. John, Cameco stunned the market last week with its announcement that it was suspending uranium production at its McArthur River and Key Lake operations. How does this affect Canalaska Uranium and its West McArthur project?
Well, oddly, a lot of uranium juniors jumped up on this news on the mistaken assumption that this is going to help with the uranium spot price. I think that, however, is a delusion. Cameco shut down the richest uranium mine in the world, McArthur River, because its long-term contracts are coming to an end. It's not going to be able to sell uranium at, $50, $60 a pound. It's going to end up selling it at the spot price of $20, where all the utilities are saying, well, we'll do a long-term contract at these prices. Cameco has shut down because at $20 a pound, it is losing money producing uranium. So at the end of January, it will temporarily suspend production. It's already done that with all its U.S. operations, and it's going to simply draw down its inventory, of which it's got enough to continue to supply all its contractual commitments. Now, the problem, of course, is that Japan still has not turned any of its nuclear reactors back on. Kazakhstan continues to flood the market with fairly cheap uranium. And there's really no sign at all yet that this supply-demand imbalance is going to reverse. The big Chinese reactors don't start coming on stream for another several years, so we're still in this air pocket where we're going to have weak prices. Now, for Canalaska, you would think this is terrible news. And they just put out the final results for the West McArthur drilling, where Cameco is earning 60%. They spent about $2.9 million of their commitment. They're about two-thirds there. I don't think Cameco will cut back on that project because it has the nearby Fox Lake deposit. In the long run, the uranium price will recover. And so it makes sense for Cameco to continue to do work on the West McArthur project. Unfortunately, the exit strategy as to when this will ever go into production or when Cameco might feel motivated to buy out Canalaska's stake in this, that is way down the road. So for a junior like Canalaska Uranium, it is small consolation that Cameco has finally found where the high-grade mineralization sits at the unconformity and will continue to do work. But even if the spot price climbs back to $35, $40 a pound, the market's not going to take the uranium boom seriously because obviously Cameco will turn its flagship project back online when prices stabilize. This is a different situation from what we have with the zinc market, where Glencore a year ago took 500,000 tons of zinc offline, and it'll take at least a year from a decision to put it back online for that zinc to come into the market. In the zinc market, we have the structural problem of macroeconomic growth gradually driving up zinc demand while Western mines are not coming on stream in a big manner. And at the same time, China is really getting serious about shutting down its numerous small polluting zinc mines and refineries. So we have likely Chinese supply decline, and so even if Glencore brings its uranium back on stream, that's not going to that's not going to hurt the zinc trend in the medium to long term. With regard to uranium, it is just a waiting game for now, and there was a big decision at this UN climate conference that just took place where 25 companies have committed to phasing out the coal as a source of electricity. The exceptions were the United States, where the president wants to steal taxpayer money to subsidize coal production, and of course in Germany, where they made a political decision to shut down nuclear energy and shift it to coal to provide the base load supply. Nuclear energy, along with natural gas, are still the best base load supply for the intermittent sources from solar and wind power. Of course, we have the huge battery technology trend underway, and it's possible that this intermittent problem will end up being solved by new battery storage technology that can store the electricity from peak time and deliver it when the wind isn't blowing or at night when the sun isn't shining.
The same day, Cameco announced shutting down McArthur River. A favorite of yours, Uravan Minerals, announced it was shifting its focus from Stewartson to tackle non-uranium targets using its microbe-based exploration technology. What will Uravan be chasing now?
Well, it was a curious coincidence that they put out this news release that they are going to put trying to get Stewartson funded on hold and shift their focus to go after other metals. It was a pure coincidence. It was the same day that Cameco said it is so bad in the uranium market that we're taking McArthur River offline. And of course, the problem for Uravan is that what it thinks it has is another McArthur River at its Stewartson project, about 900,000 meter depth at the unconformity. So finding something like that, which has to be shut down at the current uranium prices, what is the logic behind that? The company is very much committed to the technology, the exploration technology it has developed involving microbes, in particular its MET technology, where the idea is that microbes find a deposit at depth by working their way through the fracture systems in the rock and literally nourish themselves from the sulfides associated with such deposits. And in the process, they produce gases, which in turn become the energy or nutrition for microbial populations in the surface, which live off these gases being emitted deep down by these anaerobic microbe populations. So they've been applying this, to other metals, and they believe that in that area to the southeast of the Athabasca Basin, that is prime territory for base metal deposits, such as the Rottenstone deposit, which is a high-grade nickel, copper, platinum, palladium, and even cobalt ultramafic layered intrusive system. It has it's more magmatic segregation type system with very, very high grades, similar to Voisey's Bay. And this system was found in the 60s, and about 40,000 tons were mined out. But it is a fragment that has been dislocated from its source, which, based on the tenor of the nickel, has to be a very, very substantial deposit. So Uravan has chased this for a couple decades, but about 2 years ago, they sold that project to another junior called Fathom Minerals, which has been doing work to try and find the missing iceberg to which this Rottenstone tip was attached. This is still a private company, but Uravan's looking at the potential for doing regional exploration using its microbe-based technology to generate new targets in an area that has affinities to the Raglan district of northern Quebec, but which has not really seen any focused exploration. And of course, right now, the very hot metal is cobalt. And today, Tesla unveiled the Beast, a truck, a semi-truck to haul containers. This is going to end up creating more demand for the cobalt component of the lithium-ion battery. And it's another sign that this push towards electric vehicles is gaining momentum. In fact, there was just news that Volkswagen is going to pump about $10 billion into China to try and meet China's requirements that a certain percentage of the car fleet produced in China has to be electric by a certain deadline. So everywhere around the world now there is a scramble to secure the cobalt component for the these electric vehicles, and so the low-grade systems that have meaningful cobalt components, such as these nickel cobalt deposits, laterite deposits in Australia, the companies that own those have charged up substantially. Examples are Clean Tech, Australian Mines. Interestingly, these are deposits that also have a scandium component, but the scandium has been sort of left behind. It's no longer part of the talking points. It's all about the nickel with the serious cobalt byproduct that is attracting capital and the market's interest. And looking for these other massive sulfide systems that have a meaningful cobalt component. The Rottenstone had a 0.09% cobalt component. This is going to also revive interest in these nickel systems, even though nickel, it's managed to claw its way back above $5, trading somewhere between $5 and $6 a pound. Nickel is still in the doghouse because of the nickel pig iron destined production from the Philippines. It's the cobalt component. Now, ironically, the platinum palladium component, which is very much linked to the diesel market, that's actually under siege from a long-term perspective, because consumers have boycotted the diesel engines after the scandals regarding all the cheating, and so the outlook for platinum palladium down the road is diminishing, while at the same time the cobalt component is really attracting the market's interest. So we'll see what Uravan gets going in this area, but it's good to see the company acknowledge that nobody cares about uranium, is not going to care about uranium until we see the supply-demand balance reverse, manipulating the spot price up temporarily. I don't think it's going to work the second time around. It worked the first time around in the noughties, but it's not going to work this time. This would be a good opportunity to liquidate any uranium stocks that happen to have popped up in the aftermath of Cameco's announcement.
Discovery Watch with Jon Kaiser. We'll be right back after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Jon Kaiser. John, has Sodilo Resources completed its BK16 bulk sampling program?
The company announced about a week ago that it had completed the large diameter drilling part of the program. It drilled 14 holes, about 3,000 meters of 24-inch reverse circulation drilling. That's about 2,000 tons. They began earlier this month to start processing tailings left over from previous bulk sampling activities. They had bought a 10-ton per hour plant from De Beers a couple years ago. They were in the process of refurbishing it. This month they've been running this old material through to make sure it's up to snuff before they really go after this new material. And this 2,000 tons is important. About 2/3 comes from one fat phase within this BK16 pipe, which is about 16 million tons, and the other third comes from another phase. Big questions are, what is the grade going to be? But more importantly, what are the kind of type 2A diamonds are they going to recover? And there's been a lot of bad press about synthetic diamonds displacing natural diamonds and probably ultimately eroding the value of natural diamond production. But there's always going to be a demand for larger natural diamonds, such as are produced from the Corot pipe of Lucara. Ironically, this plant that Sodilo bought from De Beers was used in the early days by De Beers to process material from the AK6 pipe, which was the prior name for the Corot pipe, and De Beers had managed to miss this potential. And ironically, at one point, De Beers also owned BK16. So they will start processing in the next few weeks the actual bulk sample. Hopefully we start getting a series of news releases indicating what grades they're recovering and if they are getting any of these larger, higher quality stones. And, these big stones are important. I just saw the latest 9-month quarterly results from Mountain Province Diamonds from the Gaucho Quay deposit. The average carat value is coming in at less than half of what it was modeled for, and about a quarter of the measured value, which was based on the large, high-quality diamonds that had been discovered as outliers during the 10,000 tons of bulk sampling done at Gaucho Quay. So these big diamonds, they are really important because the smaller diamond prices are weak, and if you want to have a diamond play that captures the public's imagination, you need to demonstrate that you have the ability to deliver large, high-quality diamonds.
We'll have more with Jon Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Artemis Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Jon Kaiser. John, Novo Resources weakened this week despite a big analyst site visit. Is the market losing interest in the Pilbara-Wits 2.0 story?
The interest in the Pilbara-Wits 2.0 story continues to grow, and we saw a lot of interest about that at the Metals Investor Forum last week when I presented on Friday. But the overall market has been quite weak since early October. Resource producers and juniors have been selling off. Part of that is a seasonal component for juniors working in the Golden Triangle or in the Yukon, and as they deliver the results, even when they're good, the market's saying, well, you got 6 months of hibernation, so we're out of here. And of course, tax loss selling has kicked in. And with the producers, the stalling of gold's uptrend earlier this year has taken the momentum out of them. And there's been kind of a concern that maybe the Bitcoin bubble is raiding the interest in the gold story. But Novo's weakness has more to do with the fact that the company has a very healthy valuation, and at least 3 important questions still need to be answered, and we should start getting some answers hopefully before Christmas if the company is able to report results from the 500 to 1,000 kilo samples. It's taken from the trenched daylighting portion of the conglomerate bed at Purdy's Reward. But one of the things that's been in the background, nagging away at the market, is the idea that the Aboriginal groups who have jurisdiction over this area have turned into a giant extortion gang and are holding up doing these heritage clearances and agreements which need to be done as part of granting these applications. At the moment, Novo is only able to do work on the Purdy's Reward ground, which is joint ventured 50-50 with Artemis, and Artemis had in prior years negotiated all these agreements, got these clearances, and half of its holdings in that area do have these clearances, which means you can go and get a work permit from the West Australian government and do stuff. So at the moment, Novo's restricted to Purdy's Reward. It doesn't need to do anything more there. But even if the fantastic vision that I've come up with, like say 80 million tons of 10 gram per gold, are present at Purdy's Reward, that really won't support the current valuation that Novo has, which is really based on the WITS 2.0 hypothesis that these beds are laterally extensive, and in these 7,000 square kilometers of land for which Novo applied, there's going to be many, many versions of Purdy's Reward present. So even with the Comet Well project next door being held up, this has really nagged away at the market. So they put out a news release this week, which allowed the stock to pop up temporarily, but it has since faded away, where they had done a binding term sheet with the Narluma Aboriginal group that they will negotiate a deal whereby they will get these heritage clearances done, hopefully fast-tracked. And, you know, the Artemis people have been saying, well, it can take 6 years to get any sort of deal done with this groups. But you have to keep in mind, there's also the Western Australia government, which wants to raise the NSR from 2.5% for gold to 3.75%. And if the WITS 2.0 hypothesis is for real, what is the point, both from the native group's perspective and the government's perspective, to allow everything to be held up by this type of extortion that's going on? So this agreement simply is an agreement to negotiate an agreement. It's not the actual thing. They're going to issue 100,000 Novo shares, which is like $700,000-800,000 worth of paper that the native group will have to hold for 4 months. But presumably, this kind of deal is needed to get everybody to sit down at the table and figure out how we're going to get these heritage clearances done on these claims so that Novo can start working on this land beyond the Purdy's Reward.
Artemis was the star attraction at last week's Metals Investor Forum in Vancouver, where it displayed a table full of gold nuggets from Purdy's Reward. Are there any new developments?
Last week was a very important week for Artemis Resources. In fact, the night before the conference on Friday, they put out a news release in the last 15 minutes of Australian trading that they had done a deal to acquire a 70% interest in a group of claims that we're calling the Elysian claims, because one of the vendors was a company called Elysian Resources. They are acquiring this for 33 million shares, and a private company whose principals seem to be based in Papua New Guinea, are probably just representatives for who knows what other interests. They will have a 30% interest carried until a feasibility study for at least 100,000 ounces is completed. So this was a large hole in the land map. Everybody has been speculating who will get this. I know Novo was interested in getting this. In fact, when I visited the site in early August, Quentin Henney, we visited something called Patch 47, which was on the Elysian ground. And Patch 47 sits right next to what looks like a conglomerate bed capped by the Mount Roba salt. And in this particular area, the fossicers have gone nuts and apparently hauled several thousand ounces out of the ground. They would go in there and they're not really allowed to physically disturb the ground under their licenses, but somehow they rig up things and drag stuff across the ground to tear it up so that more nuggets are exposed, and they go in there and burn the spinifex grass, which is a real pain, literally, to try and detect nuggets through. So this land, this 70% ownership that Artemis acquired, which has these little islands to the north, as well as significant Mount Roba salt-covered conglomerate beds to the south, similar to, what's at Purdy's Reward and Comet Well. This allows Artemis to become more a brother to Novo than a son of Novo, and this has been hurting the market. The deal was perceived as a dumb deal where they gave away 50% of all the conglomerate-hosted gold potential to Novo for $2 million exploration, and then eventually 4 million shares of Novo. And Brian Lennigus was frank. He said Novo had the technological work from the last 6 years needed to properly develop a protocol for sampling these types of nuggety systems. And he said, we don't have that yet. We don't want to spend 3 years figuring out, so let's do this deal. But they got slammed in the market for that. Now they have their own land. They're going to do their own strategy in parallel so that whatever it is that Novo develops at Purdy's Reward, just in case that isn't the right protocol, here's another shot at a different protocol. They also plan to inject $5-6 million into their Radio Hill plant to refurbish it and double the capacity for recovering simple gravity recovery of gold, and use that almost as a big bulk sampling plant for material from their own ground. So they now have the ability to march according to their own drumbeat rather than follow Novo's drumbeat. So that was the big development last week. They were the star attraction at the Metals Investor Forum. It was a very good turnout given how poor the market has been in general for the resource sector. And we spoke to full capacity audiences. Isn't yet standing room only type of audience. I think we'll get there though in the new year, because when these results start to flow from Novo at Purdy's Reward, everything's all about the grade. What will the average grade be of these conglomerate beds? Right now we have just one pinpoint, one little pit that has a fantastic grade of 2 ounces per ton, and nobody believes that is possible on any sort of larger basis. So it becomes a question of, is it going to be 2 grams per ton, which is no good. That means it's just a geochemical anomaly. 5 grams, 10 grams. This is what the market's waiting for. There's uncertainty about when we'll get this information. And this is why the Novo itself has pulled back. But as a bigger audience is understanding the implications of this story, companies like Artemis have done catch-up along with these other Pilbara traders. However, the ones that are listed on the ASX have been vulnerable to algorithmic bot attacks. The big brokerage firms periodically attack these juniors. In Australia, you're even allowed to sell as little as 3 shares at a time, so they have these computers hammering the market, creating the downtrend. The recent pullback is a result of a well-timed bot attack. That seems to have run its course for the moment. We'll see what the next few weeks come. It would be very helpful if Novo produces new information about what those pits in the exposed trenches at Purdy's Reward are all about.
John, thanks for the update.
You're welcome, Jim.
We've been talking with Jon Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.